Good afternoon or good evening, everyone, depending where are you in the world and what time zone are you in. Thank you for joining us today. And I would like to welcome everybody. My name is Christina. I'm the CEO at the Duamentes. We're very delighted to have you all here. At Duamentes, we're all about growth, people, and innovation, and that's our focus mainly. We are growing businesses through innovation and customer centricity. We drive a lot of research globally, and fintech is obviously one of our main areas of focus. Recently, we've noticed a great growing interest in fintech in Nigeria. In fact, we've consolidated our findings in our meta research, which is published in The Independent. And I think we're going to be sharing this report in the chat of this webinar right now. Now we want to share our knowledge with you and have a conversation with great people who are experts in the field who are present here. It is important to expect access to expertise, especially for startups, and exchange opinions with top-notch experts like we have today. So today's topic is scale, not fail, while entering Nigerian market for fintech companies. And to kick off our discussion, I'd love our speakers to introduce themselves. And please tell us about something about your experience and about your focus and maybe your angle from which you are going to discuss different aspects of fintech in Nigeria today. So, for example, we can start with Dara.
All right, great. So I'm Dara Ahmed. I like to say that I'm intentional about driving impact within the Nigerian tech ecosystem. I'm currently a business development manager working at InterSwitch Group. InterSwitch is a fintech. It's a household name within the Nigerian and African tech ecosystem. I'm also a founder of the Tech Sales and Partnerships community. And as the name implies, it's a community for people who are in tech sales, are looking to grow, get support and mentorship. So I'm glad to be here today. I will be contributing to the topic which we'll be discussing, which is for how to scale in Nigeria as an international fintech. So I'll be coming in from the angle of business and of course from my experience working in fintech and other areas of tech. So yeah, thank you.
Thank you so much. Dr. Babatunde, could you just introduce yourself in the same style, please?
Okay, thank you. I'm Babatunde Obrema. I'm the Chief Operating Officer for the FinTech Association of Nigeria. FinTech Association of Nigeria's mantra is to drive digital inclusion in Nigeria. So we're an inclusive association. As such, today we have 23 sectors represented in the association, cutting from the legacy banks to fintechs, payments, lending, wealth tech, the ICT, and the verticals. So, I mean, nobody wakes up in the morning and says, I want to pay PayPal or I want to pay InterSwitch. They are paying for food, for shelter, for accommodation, I mean, for education and whatever. So the verticals are also very important to us. And three things drive us: to be able to connect everybody in the space together, to accelerate technological growth, and also to advocate for the ecosystem. So that's what we do at FinTech Association.
Thank you so much. Thank you for your work you do, and thank you again for being here today. So next, I would like Adeshina to take a stand and tell us something about his practice and his view on the fintech in Nigeria in overall words. Thank you.
All right, thank you very much. So my name is Adeshina, I'm the CEO at TradeLender. And TradeLender, we are using inclusive finance to drive and propel economic prosperity across Africa. We started here in Nigeria because we saw the need to be that bridge between MSMEs and access to capital. And since we've started, we've seen a growing community of over 240,000 MSMEs who today now have one form of access to finance or the other, or perhaps at least stand a better chance to get the needed capital. And really, why are we in business to support these MSMEs? We're actually in business because we strongly believe that they are the engine room. Statistics shows that over 90% of the jobs in Africa are created by these guys, and they contribute to over 50% of the GDP. 2021 reports, kept the number at over 18 million. Today we have over 13 million. Perhaps maybe because there's no jobs, or perhaps because of economic instability. But it just shows that there's an opportunity, and we need to be that bridge. We cannot allow them to just, continue to flood the market without any ability, because again, that will cause a whole lot of social chaos. So we are here to serve, and we have been able to, bridge that gap for MSMEs so far. Thank you.
Thank you so much. I totally agree with all you mentioned in your intro. I think we're going to be covering these topics later today and have a proper discussion of them. And for now, I'd really like Tunde to introduce himself as well. Thank you so much.
All right. My name is Babatunde Akimoses. I'm the CEO of Sycamore. Sycamore is a peer-to-peer lending platform that connects lenders to borrowers, and we are also helping individuals and small businesses in Nigeria and across Africa. And it's a pleasure to be here and see a lot of my friends and colleagues on the call as well. Yeah, we're also operating in similar space as Additional, who is a good friend. I think just in addition to what he has said, he's already talked about the credit gap. We're also exploring the importance of things like financial education and even empowering SMEs as well, right? It's one thing to give access, to provide credit. It's one thing for people to know the right way to even go about in spending and using it judiciously, right, to grow their businesses. So I think I would like to shed some light on the importance of financial education and how it impacts on financial inclusion as we go ahead in the conversation. Thank you very much.
Thank you so much. And last but not the least, Olubunmi, please introduce yourself as well, and we'll proceed to the first question of the day. Thank you.
Yeah, hello everyone. I'm excited to be here today as part of this discussion. And my name is Olubunmi Fabanwo. I've worked over 8 years across banking, fintech, and the blockchain space, and I've been specializing in sales, business development, marketing, and partnerships. At present, I work full-time with Binance. I lead the influencer marketing and partnership program for Africa. And of course, I believe that we know that Binance is one of the biggest players in the blockchain and crypto space. So I do a lot of things around there. I've also founded a couple of companies, both in the Web2 space and the Web3 space. And I would say I'm really honored to share the space with industry experts, and I'm delighted to share some insights. I would also look to learn from people like Dr. Babatunde Dara, and Mr. Adewumi. And yeah, on the side, I do a lot of financial education. I'm always very interested in teaching people, not just only about crypto, but about general investment, about savings, and just knowing how to manage your finances. So yeah, a pleasure to be here. Thanks for having me.
Yeah, thank you so much. Yeah, I think that we have a really fantastic group today because you all cover different aspects of what is finance, what is banking, what is modern technology in FinTech today. And I think there's going to be a really interesting 360 discussion today. So without further ado, we'll go to the first type of the questions they're going to have. So as we all know, the FinTech industry in Nigeria, along with other African markets, is expected to grow significantly this year and the coming years, with projections suggesting it could reach 65 billion American dollars within the next 3 years. This growth is anticipated to increase work investment and supportive policies in the country. And we're going to share some of the materials that we're using for this discussion today, again, in the web chat. So my first question for you is, do you see these positive changes on fintech industry as I would address this first to Babatunde as the COO of Fintech Association of Nigeria. So what do you think about these changes and trends?
Well, I think that the figure might even be understated. When you look at the fact that, so let me just give you some figures. Just today, NIPS released the details of instant payment transactions, which was 600 trillion naira, which is about $420 billion. And that is interbank. It does not capture intrabank. And I'm sure that intrabank will probably be twice that amount. So we're looking at about $1 trillion in terms of transactions on digital platforms. Between July 2022 and June 2023, digital asset transactions was $60 billion. So when you look at those volumes that are being experienced, and these are just in the payment sector, we haven't even touched the verticals. And the data from the statistics shows that 56.7% of disposable income is spent on food, and we can't feed ourselves. So we can see that agri-tech is a space where we have not scratched. We only have 3% in short insurance is just 3% patronage. So that means that 97% are yet to be insured. So I think that the space is huge, and if you can leverage on all those gaps, I think that $65 billion will be on understatement. I see $100 billion in the next by 2030. We should be talking $100 billion in terms of value of fintechs in Nigeria, if not more than that.
I absolutely agree. With the way it goes, it can definitely reach these numbers if nothing happens, if we don't have any black swans or some other kind of events. It is looking really good in this projection. Thank you so much. So I would like to address the next question to Adeshina. So how would you describe three main points and recent changes in the fintech industry from your point of view, from where you stand in? Thank you.
All right, thank you very much, Christina. I would like to take it from three angles, and the first being regulations. A lot of attention has been drawn to the fintech space because, again, government, regulators, and various other stakeholders are seeing the importance and the role that fintechs actually play in actually, promoting and helping for shared prosperity across the region. So from Rwanda to Ghana to Nigeria, regulators are actively, changing the baton. So before now, they used to be rather reactive, but today you have them actually being proactive, engaging with various stakeholders, and also setting various guidelines and associations to, put regulations, not just to protect the customers, but also to support fintechs in doing what they know how to do best. I think that is one side of it. There's also the side of it whereby, there's recapitalization for the banks, and all those things would also impact on the fintechs in the coming weeks and months to go. The other side is user adoption. Right from 2020, we've seen an increase, a tremendous increase in the adoption of technology. But it did not end there. Last year, with the CBN policy on the cashless economy, and changing the, currency and all that, a whole lot of people adopted fintechs. Again, it showed the role that fintech actually played. But again, what this has opened up is an healthy room for competition between the banks and also the fintechs. So prior to now, it's okay for you to do a transaction, and maybe perhaps the transaction doesn't happen within maybe minutes or seconds. But with the emergence of various fintech platforms today, the banks now know that they need to up their game. So who wins at the end of the day? The customers, the users are actually the beneficiaries here, because again, everybody wants to be able to serve them efficiently and effectively. So for me, I strongly believe that these three things: one, regulations; two, customers; and then lastly, we are actually growing a very thriving digital talent economy. And it can be looked from two ways. One, those that remain in Nigeria and work for the Nigerian fintechs, and also maybe a few traditional banks who are okay with people working remotely. And then the second part, Nigerian talents who are going across various countries, whether it's Europe or UK or the United States of America, who are still committed to building the fintech landscape in Nigeria, getting insights and also various opportunities that they strongly believe can be adapted and adopted for a playbook in Nigeria. What that is actually positioning Nigeria and Africa is that we're actually not going to go through those processes that other parts of the world have gone through, but we're going to leap forward. So it again positions the African continent as a continent or as a country, specifically for Nigeria to look out for. So those are the three trends that I've seen, and I'm very excited about. Thank you.
Thank you so much. I agree more, and I think we're going to be covering some of the aspects that you mentioned a little bit later. So we'll circle back to that discussion. And for now, I would like to switch to the fact of the growing interest from the investments in Nigerian FinTech by global venture capital firms. Recent example, Maiden, a Nigerian startup that enables businesses to issue virtual cards through IP, has been selected for iCombinator Winter's 2024 batch. It's very, very recent news. Another great example is the InterSwitch company that successfully expanded across the region. So we are very lucky to have Dara here. So my question, obviously, the strategy of the company and what was the main focus for you within this activity? Thank you.
All right, great. So thank you very much for that question. So I would say there are a couple of things that I can pinpoint has helped InterSwitch remain the standing strong company that it is. One would be a customer-centric approach, right? First of all, InterSwitch is a company that builds what people need. InterSwitch is a company that builds with people in mind. So InterSwitch is it's a very large business. On the outside, everyone looks at it as InterSwitch, but on the inside, there are about 6 different business divisions within the company itself. And one thing that is common with all the divisions is that we're constantly building what people need. So every time we have to go back to the drawing board and we assess the things we're putting out to ensure that, it's actually solving a problem for people. That's one thing. Another thing I would say is the ability to bounce quickly from regulations and regulatory limitations. I'll give an example. So CBN released the circular, I think it was just last week, concerning IMTUs. And it impacted one of our businesses. It did. So while we're still working around that, one of the things that we were able to do as a team, for my team, was quickly go back to the drawing board and see how we could maneuver things, see what other things we could do within that period. And now we've come up with new strategies and new business lines that we could chase. So despite being a big company, right, we're still able to move quickly and make decisions irrespective of the regulatory limitations that come in. Sometimes the regulations can be stringent and it will definitely impact the company one way or the other. However, that ability to maneuver it notwithstanding, the ability to bounce back, the ability to go back to the drawing board, I think is a saving grace. Another thing that has been helpful for us is ecosystem partnerships. We've been driving this. One thing we know for sure is that tech is constantly evolving. New technologies are coming up, new problems are coming up to be solved, and there are new champions in the market solving those problems. So we are keen into partnerships with ecosystem players, digital players in the ecosystem that could help us as well. So I'll give an example. Recently, we partnered with one of the leading mobile money operators, OPay. They're quite popular here in Nigeria. And we're looking to do that and more with other businesses as well. So leveraging ecosystem partnerships is really a great key to sustaining, our brand, sustaining our business as it were. Another thing we've done well is to manage relationship effectively with partners, with our merchants, as well as customer support. Now, for a big company, customer support is really, really tedious, but one of the things that helps to keep the company running is keeping customers satisfied. So we're constantly working on processes to automate, processes to simplify, easier ways to solve people's problems, all right, so that they have a better experience using InterSwitch's products. Again, it's a customer-centric approach where we're always open to taking feedback, going to the drawing board and making changes. Even though for a large company that might be difficult, I think one of the things that keeps us successful is our ability to be able to walk around that, like act that, yeah, if I may say. Yes, those are the things that come to mind. And lastly, I would say hiring great hands, right? Hiring people who see the vision, hiring people who drive the vision, hiring people who carry the vision as well and run with it. Those are the things that, keep InterSwitch standing. If I've been able to answer your questions.
Thank you so much, Dara. I couldn't agree with you more that as we grow, as the companies grow, we have to stay very relevant and very quick in making our decisions. And even after the decisions are made, we have to stick to them if we feel like they are very good ones. So we have to be very fast in implementing these decisions and these changes as well. So thank you again. And I would like to ask another question about this segment of the topics that we have today. And dear Tunde, at Sycamore, you're a trusted provider of innovative financial solutions across the developing world. So how do you think you have to avoid the mistakes entering the Nigerian fintech market? What can be done? What are the good pieces of advice that you could provide for our audience? Okay. Are we here? Everybody's here?
So what's the question directed to?
Sorry, yeah, let me repeat the question then. So my question was addressed at Tunde. Sorry, I'm using the shorter version of the name because we have two Babatundes today. I hope it's not confusing. So yeah, my question was at Tunde from Sycamore. What are the advice that you could provide in terms of what mistakes not to make specifically when entering the Nigerian fintech market? Thank you. Okay, we cannot hear you at the moment. Is something
Tunde, you are
wrong?
muted.
Yes, you're muted. Maybe something wrong with your app. Okay. Okay, I think we can go further and we just go back to this question when everything's right with the connection, etc. So what I would like to discuss later is the Nigerian banks and their part in the financial industry in Nigeria, because there has been a lot of changes and moves from traditional banks recently, especially. And we see that Nigerian banks that really charge into digital lending market that was previously mostly followed and controlled by fintech companies. So Nigerian traditional banks actively moving into this area. And as we know, there are 211 licensed digital lenders in Nigeria, which is quite a lot. And this move underscores the hard competition between banks and fintech companies for digital finance services. And we're going to share some data about this in the web chat again. So I would like to discuss this competition between the very fastly moving traditional Nigerian banks and fintech companies that have already been there. So my question is, how do you think are going the banks, traditional banks, going to be successful or not? And I would really like to start this conversation with Adishina. So could you please share your thoughts?
Thank you once again. For me, I strongly believe that the traditional banks have been here for so long and they are just still playing catch up. Sometimes, it's quite difficult to be too big to quickly make things happen. I'm excited to hear my colleague here on this panel, Dara, who says that InterSwitch is still able to use the agile model to make things, happen quite quickly. I think the traditional banks are just too big, to make decisions, faster, the way the fintechs would make it. And this is where there's also opportunity for collaborations. I can tell you for sure that some of these banks are not actually disbursing this money by themselves. They are collaborating with, fintechs and then using the fintechs to be able to extend out these funds. Forget about the statistics of saying we've given out 29 billion or we've given out, some of them are just greenwashing. for the lack of better words, especially when you talk about to MSMEs. I'm not going to mention it, but I remember when we first started, in this space, and someone said, "Oh, we've given out XYZ billion, naira worth of loans." And then we dug a bit further and we looked at their audited financials, and we saw that they've only given to 26 people billions of naira. So what it means is they're actually not giving this money to the MSMEs. They're not giving this money to the person that needs, or the individual that needs 50,000 naira, which is just maybe $50. They're actually giving it to people maybe perhaps who needs 200 million or 1 billion, and those are not considered as SMEs. Well, for the better, maybe someone else can prove me wrong, but those are not considered as SMEs. So for me, I think, yes, it's a positive move that the banks want to be able to come into this space. But do they have the right technique? Do they have the right skill set, the right manpower, the right approach? And are they agile enough to make effective decisions? I don't think they have that resources. Can they collaborate with the fintechs? I would say yes. Can they buy out a fintech or buy out fintechs and then spin it around? Can they maybe perhaps buy out and maybe rehire people from the fintechs landscape and make it happen? Some of them are already doing that, and they're doing fantastically well. But again, a bank will always be a bank. Once the thin line is crossed, for even a fintech, once a fintech goes from the core function of being a fintech to becoming an MFB, what we call the microfinance bank, they lose it. They lose that touch of agility. And for me, that is actually what slows them down in the quest for financial inclusion. So again, in the next few weeks, in the next few months, we would know. But again, 2024 is an interesting time for the financial inclusion drive, which obviously will translate to helping more people access capital. Thank you.
Thank you so much. Again, we are covering this aspect of being fast and being adaptive, like Dara mentioned in her answer before. And the fastest, the fittest is always going to win, as we know. So it is really interesting that I agree with this greenwashing. Maybe it's going to be like this. We'll see really in a couple of months, I think. But obviously, it is some kind of way for the traditional banks to address the issue as good as they can, and we'll see how good they actually going to behave and activate their banking system that they currently have. They can be very, very conservative to serve the clients that are already very fit for very fast services from the fintech company. So I think this battle is going to be really, really hard for the traditional banks. So we have an expert on banking here with us. So I would like to address this question to Lubomny. What do you think, in your opinion, is there a chance for the banks to actually succeed in this competition, or they're going to be too slow? What do you think? Thank you.
Okay, so I would say I partly agree with Mr. Adeshina. However, I'd like to play on the part of optimism and also give an example of a particular digital lending product that was launched solely by a Nigerian bank, a financial institution where I worked, that's GT Bank. I remember that Quick Credit, when it was first launched, gave a lot of fintechs a run for their money. And I would say that largely it's been successful. So in that vein, I think the move, like this particular move by a lot of other traditional banks, is very commendable. And if we look at the primary role of banks, your primary role as a bank is financial intermediation. That means you collect deposits and you lend. Every other thing is extra. And these banks are already at an advantage because they can easily leverage the existing customer base. The existing customer base of a typical bank is almost times 10 or times 20 of any fintech startup, as the case may be. And they're already ahead in terms of regulatory compliance because you cannot compare the scrutiny that a traditional bank faces from regulators to what regular fintech face. and I mean, they have the financial infrastructure, or would I just say financial might, to compete with these fintech companies. And I would say to succeed, yes, there's a lot of bureaucracies right now. Maybe they are not as agile as they should be. And I would also say that in order to succeed, there are just some certain factors. Like there are some things that you have to put in place. And that's why I'm saying I'm playing optimism. And I believe that these banks, I mean, playing in this particular digital lending space, they'll probably be able to quickly catch up and get these factors in place. And I think that one of them is the need to swiftly innovate and be susceptible to change. Unlike what you have in the regular banking system, where customers' needs or customers' preferences do not exactly change. You have about 20 million customers, so you can't exactly quantify what the preference of a large number of them may be. So it may be very, very slow. But in this particular digital lending space now, it is controlled by customer preferences. So today, the customer feels like this is what I need to be properly communicated with via push notifications for me to be reminded to take loans or pay back or those kind of things. That is what is happening now. The customer's preferences is changing from time to time. It can change today, it can change in weeks. And are banks ready to be able to knuckle down and be as agile as possible to follow or to be able to innovate swiftly? So I feel like these banks, of course, they need to get on with customer preferences and provide seamless experiences. And I would say also, in terms of maybe social media interaction, in terms of customer service, I mean, you just have to step up, because people want to be communicated with. People want to be made like they feel special. I'm sure Dara knows what I'm saying, because that's exactly what the space requires now. You can't afford to just sit back and always be playing diplomatic or playing cold. You have to be, you have to always be in the customer's face. You have to be innovative about how you communicate with the customer, about their experience from front end to back end, everywhere. So you have to be, you have to be top notch. And honestly, I think that Nigerian banks can actually, that they can succeed, because we have a very, would I say, relatively advanced financial system, and you can see that banks have tried to evolve over time. So yeah, I'm standing on the positive side, and I would say that yeah, they can succeed.
Well, this is interesting because I agree with you that on the other hand, the banks, they have so many resources that if they make a decision, ultimately they can make this change. It will going to be taking more time than for fintech companies that can pivot very fastly because they follow the customer to the T. And I agree with you that the push from the customers is going to be very massive for a lot of traditional banks, because if there are so many alternatives, and there are quite a lot of alternatives, they're going to be going there if they see that the services are better, they're being heard, and they see that the products are better for their special needs and their, desires in terms of what they would like to do with these banking services, business-wise or personal-wise. So yeah, it's going to be interesting how every part is going to respond to one another. So before we go to the second discussion, that just brings us closer to the scaling aspect of our today's webinar, I'd like to mention that our webinar is actually being recorded, and we're going to use the video and share it with all the participants and obviously with the speakers. And we are going to share it with the followers and members of our community from 35 countries, though I've been heard today that it's actually 37, so I stand corrected.
Yeah, apologies. I could hear you clearly, but I couldn't unmute myself for whatever reasons. Yeah, so so we're talking about avoiding, some of those mistakes when entering the Nigerian market, right? I think we've alluded to some of them in some of the conversations that we've had already, which is really, I think there's a common, even if I have some slight disagreement with it, there's a common, saying people like to say that culture is strategy for breakfast. So I think there's a very important lesson there in terms of just cultural context, right? Because there are very specific ways that business is done here in Nigeria. And when you see multinationals even coming to even coming to like do business, they typically have to modify their business models just to fit into the culture, both ethnically speaking, and religious nuances and whatnot. So that's very important to just really partner with locals. I think Dara already mentioned partnerships, and generally there is also just collaboration with the ecosystem, right? So we're having a call now. Many of us have met here, for example, through the FinTech Association of Nigeria, through Mr. Babatunde, and we've had to jointly work together to resolve some FinTech issues going through the association, right? If you try to operate as an island, more or less, there are so many things that you'll be cutting yourself out of in terms of just being able to move forward. So that ecosystem collaboration and just really get to the ground and seeing what other people are doing, what is the success, and engaging. And last but not least, and I think this applies everywhere in the world, that relationship with regulators very, very key. A single policy can change your business entirely. In the last 1 week, CBN has probably released like 6, 7 circulars on different issues, and people are having to modify their businesses. And now everybody's refreshing their feeds to make sure that there's no new circular every day. So keeping that relationship with the regulators also very, very key, and just knowing which regulators to go to when you want to get things done. So I would say, those are some of the things you need to keep in mind when entering the business landscape. Thank you.
Yeah, thank you so much. Yes, good relationship with regulators and just following the rules, at least in the beginning of your journey in your country, is absolutely must, because nobody can tell you if you're going to have a follow-up to the journey if you mess up in the very beginning. So the rules are very strict. I agree with you. So we're getting closer to the main topic of our webinar, which is scaling up. And because some of our participants here are from different regions, I would like to ask to show the highlights about launching into Nigerian markets by Dr. Babatunde. So could you please share your thoughts about what are actually the best ways to proceed by entering specifically Nigerian markets? Thank you.
Okay, so the market, we have a very vibrant market. We have 200 million people. So that's really an incentive to come to the market. Two, we have a highly knowledgeable space. People are looking for convenience. So if you have a solution that people need, they will key into it. When you look at Kuda started like 4 or 5 years ago. Today they have 7 million customers. It's because they are meeting a need that people need. Paystack came in and they're solving problems. So you must have a solution that people need, and the market is ready. I think people even want to be trendy. Now, in January last year, because of because of the cashless crisis, you had likes of OP and PAMPay distinguishing themselves in terms of service delivery, and every other person went opening accounts with OP and PAMPay, and they don't transfer money to this bank or to this, was transfer money to my PAMPay or OP account. So you must be solving a problem. And I also think that we have a thriving ecosystem. The fintech ecosystem is thriving. Nigerians are innovative, they are agile, So if you're coming to the space, you must come with innovation and you must be agile. Or else you won't survive the market. The average Nigerian entrepreneur wants to be the best, if I put it that way. So you come into the space, it's about solutions. There's nothing apart from that, and the market is there. Nigerians, we're a group of people in terms of culture where people want to show off about this new, I'm part of this new product or this new service or this new enterprise. So I think the market is good. The potentials are still huge, especially when you look at the verticals. If you can solve a problem within the value chain of the verticals, the market is big. We have 200 million people to feed. So if you can solve a problem in the agricultural value chain, you have 200 million people patronizing you. People travel a lot. If you can solve a problem in the transport sector, we have 16 million deficit in terms of housing. And I know you can solve prop tech solutions. There are some fintechs now using blockchain and tokenizing properties. So you don't have to You just have to have small amount of money, and you own part of a commercial building, and you get dividends at the end of the year. So there's lots of opportunities to look at. I always tell startups, stop struggling to be the next Flutterwave or the next InterSwitch. There's so much to be done in the verticals. Look for a solution, solve a problem there. And so if you're coming into Nigeria, you're coming with something unique that solves a problem, and the people are there to patronize you.
I absolutely agree with you. We have conducted several projects helping other companies to enter Nigerian markets before. And though this is a huge economy, there's so many players already, there's still so many underserved niches that you can address. And this can be a very interesting approach to entering the Nigerian market on the whole. And you can start from one niche and then expand to others if you can fit the competition that is going to happen, obviously. And I would like to make a small announcement that we have really great journalists with us today. And I think we're going to discuss one more topic with our guest today about regulators, because we have covered it before. And then we're going to ask our colleagues to ask their questions on what we have already discussed. So before we go into that, I would like to discuss the regulators and regulations, because just recently there was some news just last week that there are going to be tough new regulations from Nigerian central bank. And obviously these regulations aim to introduce tighter controls to combat persistent fraud, which unfortunately still happens. And this obviously indicates a regulatory landscape that is becoming increasingly stringent and tough for fintech companies, also making them harder to compete with traditional banks, and we discussed today. So I would like to discuss these regulations, first of all, with Dara. And Dara, could you please share your thoughts on these changes in regulations that's going to be implemented this year? Thank you.
All right, great. So I think, first of all, it is very important to note that one can't categorically state what regulations the CBN or regulators will decide to come up with. Sometimes it's sporadic. However, when it regards to fraud, I 100% or to a very large extent agree with some of the regulations. And I'll give examples, right? Permit me to dive into open banking, because I worked in the open banking space for a while. And we have something in Nigeria, we have something called the BVN. The BVN is your bank verification number. It's a unique number that is peculiar to every citizen. It's as important as your social security number or whatever identity number ties to your country. So in the past, we'd have open banking players in Nigeria that could access a customer's BVN without their consent, right? Now that's a dangerous thing, especially if they had a bad actor within the company. Now that might not be fraud from the outside, but within the company, it exposes the citizens that have these BVNs. So CBN rolled out a new regulation, I think that was last year. And one of the things they did was to promote, the regulation was to promote the data privacy and protect the data of citizens in such a way that for you to access that BVN, right, you would need the customers, the owners of the BVN would need to authorize via an OTP. Now, it was a very simple thing, but that was very important to protect the data of citizens, right? There have also been more tighter regulations around KYC to curb fraud, because fraud is one of the biggest challenges that fintechs face next to regulations. Fraud is, a lot of fintechs have lost money, good money, a lot of money to fraud. So the CBN or other regulators coming up with regulations to curb fraud is something that should be encouraged. Although on the back end, it might look like it's a bit more strenuous. For instance, when they released some tighter regulations around KYC, right, it made the onboarding process slightly slower compared to what some fast rising fintech had achieved. They had achieved a faster, seamless, more seamless process that required lesser details. Now CBN is saying, oh, we want this for you to onboard a customer. We want these details. We want these details. It sort of slows down the onboarding process. The customer who is onboarding on your platform may lose interest at that point. However, it is protecting the company, and it's even protecting the customers themselves to ensure that their money is safe. So a lot of the regulations that are coming up around fraud are to be encouraged, to be very honest, because fraud is a major problem, right, within the ecosystem when it comes to fintechs. And I believe that these regulations will in fact help in curbing fraud and bad actor activities. I hope I've been able to answer your question.
Yeah, thank you so much. Actually, we're going to discuss the aspects of fraud a little bit later because this is a really huge problem and we have some interesting data on the topic. But I would like to stay a little bit longer on the topic of regulations because we had the question from the participants today. And the question is, do you agree that regulations are too strict for smaller companies? So I think it can be an open question. So everybody's encouraged to answer that and share their opinion on the topic. So are these regulations too strict for smaller companies or not? What do you think?
Okay, maybe I can
Yeah,
go.
please hop
So
on.
I think we have to understand that for every regulation, for every law that comes, there is a need for it. So before the regulators will sit down and say, "Oh, we have to put this in place. We have to put this regulatory measure in place," there has been a need for it. Something had happened that would prompt that to come on board. And in this part of the world, or every other place, most places, regulation is always playing catch up with innovation because we are innovating rapidly, like we mentioned. So it doesn't matter whether you're a big player or you're a small player. If you are coming into the space, you have to know the pros and the cons, and you also have to know that it needs to be regulated. So what is good for the goose, the big goose, is also good for the small gander. However, I feel like these things can be taken on a case-by-case basis. So I partly agree that small companies or smaller organizations may face that as a threat compared to bigger organizations. If you look at how the CBN, for example, we easily just, ask maybe an interswitch to pay a very large sum of money because of just one tiny mistake. I mean, we've experienced it over and over in a lot of financial institutions where you pay penalties and all of that. You cannot bring that exact same measure to a small organization that is getting just a little revenue compared to what those guys are saying. So regulators may want to, take it on a case by case basis. If you have this band of business, or if you are on this level of business, this and that are things that you need to put in place. But there needs to be, it is compulsory for you to have a general, there just has to be a general type regulation for everybody, just to ensure that bad actors do not come into the space. We also have to look at it from that part, that these things are being put in place to protect us, you as a business, and also to protect the customers which you are looking to serve. So innovation, rapid, regulation, a bit slow and maybe stringent, but it's very, very needed and required.
Thank you so much. Does anybody wants to add to this question if the regulation is too strict for smaller companies?
Okay, maybe I should come in here. So regulations are necessary. Regulations are important. A financial system is as stable as the regulations that govern it. And I think that the challenge is the fact that everybody's a startup. Those operators and regulators were all startups. Nobody knows everything. Everybody's learning. And unfortunately, regulators at times use what I would call wrong instrument. There are tools that they're allowed to use to freeze, to ban, to suspend. Those are easiest tools to use when you think that there's a problem or you don't understand a space. But the best tool is to put regulations in place. I mean, 2019, we worked with SEP to develop the FinTech roadmap for the capital market. And one of the things contained in that document was regulations for VASPs. And SEC started working on that regulation. The draft was already out. And then CBN comes and says, banks, you cannot bank crypto exchanges. What that has led to is to put Nigeria on the gray list of the FATF because there were no regulations. Regulations are important. So it helps to put perspective. Even investors are more confident when there's a regulation. They know this is how far I can go. How do I operate? And if I want to go into this sector, this is how far I should go. So regulations are important, but regulations should not hurt the business. And I think that's where the challenge, regulation should not hurt the business. Where there isn't enough capacity, there's a need to learn. I mean, SEC just registered Bitcoin ETFs, but then SEC also in America says that we do not have enough skills. They're admitting to the fact that they have a gap. And I think that regulators should also come up front and say, look, we don't have skills in this place. We need to build up skills in this place to be able to, but regulations are important. And for operators, we must understand that regulators are marathoners. Operators, we are sprinters, so how do we bridge that gap? What we have done in the FinTech Association of Nigeria is sort of what you call a regulator forum, meaning regulators and innovators. It meets quarterly. All the regulators and the space, CBN, SEC, and the operators, and we can discuss issues that affect the ecosystem. I mean, it's coming up gradually, and we hope that eventually to be a platform where we can actually bring up regulations, because at times as operators, we have more information than the regulators have. So how do we share ideas and come up with regulations that works well with everybody? I think that's really what is important we should try and achieve, where we can sit down together and develop the regulations together.
I cannot agree with you more, because it is the common place with almost any kind of regulating different markets in different countries, because most of them actually have to react to the changes in technology and the changes in the customers' behavior and the practices that companies have. And it's always going to be a game of catch up for a lot of them. And if they really lag behind in terms of adopting newer technologies, then they can decide to use these very harsh decisions and regulation practices, like you mentioned, like just put a stop on some kind of practice until they catch up, until they figure it out and decide if it's a good new technology and can it be properly regulated to provide better services and protection for the customers in the companies. And it seems like the topic of regulations is the hottest one, because we also had another question about this. So let's stick with this topic for some more minutes. So the next question is, how can you compare regulations in Nigeria and the whole region in Africa, or any other country in particular? Where to launch will be easier? Well, obviously, as we have discussion about Nigeria and we have Nigerian experts, this is a bit provocative question, but well, I will still let our guests decide and answer the question. So can we start with you, Adeshina? What do you think? Is it too much of regulations in Nigeria, or is it just enough to enter the market? Thank you.
Thank you very much. I think when you compare Nigeria with other regions, I would say that although other regions provide some level of support here and there, Nigeria market is still a very fertile soil for you to actually come and test out your product. It's either you go home or you succeed. That is the truth. And that's the whole essence of being a startup or being, an innovator. It's either you succeed or you go home. Another thing which has been mentioned here is that the same regulators actually need active participation from us as operators, meaning that when you are coming into the region, go to them and engage with them. Or you can come to the FinTech Association and engage with them to also, introduce you to the right regulator, so that you are actually conversant, with the various regulations that you need to abide by. The fact is, every other region has underlying regulations that they can use to kick you out of their market, if they feel you're a threat. Nigeria is even less regulated, and there's just a whole lot of ways people can still operate at a given scale without anybody even looking at you. Meaning that you can come into the Nigerian market, operate at a given scale, and then when the attention is, getting much more better, then you make sure that you have already perfected all your regulations. Because again, the regulators don't even pay attention most of the time to people who don't blow out of proportion. And when I mean blow out of proportion, I'm actually looking at it from the context of maybe you are still piloting with maybe 1,000 users or 2,000 users, or maybe at least under 500,000. They start looking at you once you start crossing those benchmarks. That's when you know that they have actually been keeping an eye on you. So before you get to that stage, you perfect all you need to do. And again, if you've succeeded in the Nigerian market, it's easier to scale into any region. There are a lot of controversial arguments to say, oh, East Africa region is better than Nigeria or better than West Africa. But the fact remains that once you nail it in Nigeria, you are good with every other region across Africa. Thank you.
Thank you so much. I know this is not 100% relevant to the discussion, but I just remembered the song by Frank Sinatra about New York. If I make it there, I will make it everywhere. And I think that it makes this sense like a good parallel about Nigeria. It is the hugest economy in Africa. There's so many customers, there's so many different niches as we discussed today. So if you can really make it in Nigeria, you can really scale to other countries in the region. The closest ones are the whole different part of the continent, whatever fits your product market fit and your go-to-market strategy, basically. But because they're good competitiveness and they're good regulations that really help to build the structure of the finance industry on the whole, this can be a very competitive, but at the same time very fruitful, as you mentioned, a country to actually start entering the continent. And we've touched on the topic of competitiveness before, and I would like to circle back to the resources and the capitals that you actually need to compete on the market, especially in Nigeria. So as we mentioned before, you really need to have a lot of resources to compete with traditional banks because they traditionally have more money and more resources in terms of employees, etc. And this reflects on the growing competition and the need for substantial resources to innovate and scale for the fintech companies. For example, RegTech Africa and Akbaitech has released a report in the state of fintech and RegTech activities in Nigeria just recently, and we're going to share this report again in the comments in the chat. This report indicates that in the first half of last year, African fintech deals reached 60 transactions and raised a combined 189 millions in the second quarter of last year. We don't have newer statistics yet because some deals are still in the process, even if we are in the second month of 2024. But still, this is very interesting information, and we can support this actually because at Duamentes we collaborate with numerous fintech companies, as I mentioned before, and when we conduct country scoring, Nigeria is always consistently in the shortlist of the companies to expand, as we discussed before. And the topics and reasons for that the customers and the entrepreneurs share is the rapid adoption of new technologies, market potential, and innovations. And because we have been covering the aspect of investments and capital gains, I would like to address my next question to Dara, which has already had the huge experience with that. So my question is, why do you think are there international VC that seek for Nigerian startups and scale-ups? And what in particular are they looking for in Nigerian companies when they decide to enter the market themselves? Thank you.
All right, great. Thanks for that question. So I'll say that international investors find Nigeria appealing due to the large market. I think there's been mentions over and again about the population, the large market, and also we have a tech-savvy population, right? So yeah, recently we've seen improvements and increased investor interest, right? Making Nigeria's fintech scene a bit more promising compared to what it used to be. For instance, there was a report released in 2023 that showed that majority of Y Combinator's backed startups for Africa actually Nigerian companies. So I think one of the things they watch out for is the fact that we have a large economy, right? And fintech is growing really, really rapidly within the Nigerian economy. Also, we have a large market, and that is something that they could piggyback off, in order to decide to come invest in our economy. So those are some of the things that we are seeing over time that, is like the green light for them. So aside Y Combinator, we still have a couple of accelerators and incubators that are still looking to invest in the Nigerian companies or in Nigerian companies, irrespective of the global recession and how, tech globally has taken a bit of a hit, right? we still see investors investing in the Nigerian economy.
Thank you so much, Dara. And as we have another speaker that has experience is raising funds, especially from international investors, I would like to address the same question to Tunde. So would you share with us your experience of working with international VCs and what was their angle when discussing the deal with you? What are your success stories in this sense? Thank you.
All right. Yeah. So I think Dara sort of alluded to some of the points as well. I think people are attracted by the fact that there's a substantial market, not just in terms of breadth, but even depth of a lot of products that are not yet established here. So it's still a greenfield for a lot of fintech products that are commonplace in Western markets that are not yet fully here. So those opportunities still represents themselves. And even if you look at the stage of maturity of a lot of our companies, right, it's still on the rise. We have, very, very few unicorns compared to what you would find in the US. Some of the biggest valuations here are between $1 billion and $3 billion, and that is just another day in Silicon Valley, right, where pre-seed people at this stage are raising that amount. So when you look at what is possible, compared to the stage of where we are at, it shows you that there's still a lot of opportunity to sort of capitalize on if you could come in early enough, right? And I think the how do you put it now? They also have an advantage in terms of the currency, right? We've spoken about devaluation and all of that stuff, but the truth is, it gives you better purchasing power in terms of being able to acquire more, and not to mention the amount of talent that you could get in this part of the world, right? There is enormous talent in Nigeria, so much so that we're even exporting talent now, right? It's become one of our biggest exports, to put it in a euphemistic manner. So there's that opportunity, and on the side of the startups ourselves and the fintechs, as long as your books are in order, you have good relationship with regulators, you have decent corporate governance, and then you're also showing that you're working with people in the industry and the relevant associations. I think that is that really speaks well to some of the international investors, and just showing them that, look, it's still day one in Nigeria and Africa as a whole, right? And we still have opportunities for 1,000, 2,000x that has long gone in some of the Western societies.
Yes, thank you so much. And again, a little bit of provocative question from our chat, which is, reports say Asia and Africa are the best to invest. Do you agree with that? I think we all agree with that, but if anyone would like to elaborate on this question, feel free to do so for a couple of minutes before we go to the cryptocurrencies and blockchain technologies. So
yeah, since I'm still unmuted, I'll just take it. I think that's absolutely true. I think it's a question of, we have to look at every region in their spectrum of development, right? And in the last few decades, we've had a rise of the Asian tigers, and now we're seeing what's happening with BRICS. We're seeing what's happening in different regions, right? And gradually, Africa is actually on the rise now, and people that have keyed into places like, say, Dubai just 20 years ago, if you take a snapshot of what Dubai and a lot of the UAE regions was just 20 years ago, you can see the rapid development, right? And it's at that stage now that even if you take a snapshot of the business landscape, especially fintech, just 10 years ago, the difference is dramatic. A lot of the fintechs that are doing well now, just very few of them were existing just 10 years ago. So if you look at the progress that has happened within 10 years, it only makes sense, business sense, that you would come here and be in it for the long term, not quick 3 months, 6 months checkout. But if you are in it for the long term, you actually see substantial gains. So I think every region is in different places in their spectrum of development. and Africa is currently on the rise. So it actually makes business sense to be here now because we're still on the upward trajectory.
Yes, and actually, I think this can be a very good transition to our next topic, because obviously Nigeria is famed for being one of the fastest countries in terms of adopting new technologies. And one of these is the crypto adoption. And it is Nigeria currently has the highest rate of crypto ownership among its population in comparison to other countries. So the most people, compared to per capita population, use cryptocurrency, which is absolutely fantastic. It happened in the last 10 years, as you mentioned. So I think this is a very interesting topic to discuss a little bit further, because it is so different from many other countries in the world, even from Asia, which is also very fast in adopting new technologies in fintech. So there are obviously different degrees of awareness regarding cryptocurrencies and blockchain as technology among the customers, and why they do recognize such popular coins as BNB, BTC, Doge, Shiba. They command the widespread recognition. Users often ignore some complexities of blockchain technology, and instead they are paying attention for the practical uses and financial benefits. So I would like to discuss with you this topic of how you define the cryptocurrencies and blockchain landscape in Nigeria in terms of the businesses that you run and you're connected with, and you as the customers as well, because I suppose you're one of these people that are adapting these new technologies from the very start. So to start, I would like to address this question first to Adeshina. So could you share your experience, please?
All right, thank you very much, Christina. Just before I dive into the use of crypto blockchain, I just want to say that one more reason why people actually would prefer Asia or Africa is the fact that we are not solving problems for want. We're actually solving problems for essentials, meaning that we are helping to achieve the sustainable development goals. And without these two continents, I don't think the global world can achieve the SDGs. So for investors who are looking not just to make returns, yes, returns is constant, but to also make a difference. And I think most people across the global landscape are looking not just to, when you have so much resources to be able to deploy to make the world a better place, you're not looking for somebody who is just providing an innovation for a want. You're actually looking for someone who is actually helping to eradicate poverty, who is helping to create jobs, who is helping to make a difference in the lives of several people who are living below the line of poverty, taking them out of that, that dump, and then taking them up to their full potential. Now, back to crypto. I think for me, because we have a vibrant, young people, anything you throw out there, has the potential to actually get their attention. So crypto blockchain is something that was really, really adopted here in Nigeria and also across Africa, looking at the pandemic, from the pandemic 2019 entering 2020, that was really like the peak of it. Even with all the regulations and the ban, if you go to the typical informal markets, you will see people are actually exchanging and trading with crypto. People are buying stuff, people are buying phones, people are buying stuff in the informal markets within Nigeria. That's just to show the extent, that it has been domesticated. So when you then layer up technology, leveraging on blockchain, I think whenever people mention this particular aspect that I'm about to mention, a whole lot of people always raise an eyebrow. Nigeria is the only economy where people can still use PayPal as freely as the way the rest of the world, actually can use PayPal. So when you leverage blockchain, crypto, to ease the ability of people to be able to exchange and make payments, I think what you're doing is you're providing the opportunity for millions of people to be able to achieve their full potential. There's a lot of people who are in Nigeria and are working for global companies. Just as my colleague Babatunde has mentioned, we are now outsourcing global talent, or we're outsourcing talent across the world, both the jackpass and the, pajas, or what, the way they call it, I don't know. So if someone can help me. But again, what it simply implies is blockchain is now there to help them to be able to seamlessly receive their payments, seamlessly also make payment back, and also continue to achieve their full potential. Not for them to maybe earn $1,000 on a freelance job, and at the end of the day, what comes to their pocket is actually maybe 400 or 500, just because of the multiple channels that it has to go through with various fees. I think those are some of the things that blockchain crypto is helping to decentralize. And with the adoption in the next few weeks or months of the central bank digital currencies, I strongly believe that we would be on track towards making sure that this is something that has come to stay. It's not just talk, because again, for over the last few months or years now, there's been a whole lot of reports from PwC and several others who have made suggestions. I strongly believe that with adoption, and especially referencing the recent regulations that was put out to support and also to regulate that space, once people can adapt and align, I strongly believe that Nigeria will be on top of it. So 32% or maybe 37% is just a small number to the overall potential today. Thank you.
Yeah, thank you so much. It is really very interesting that I think even in the Western world, more companies, I mean investors, private equity firms, and VCs, they are actually looking for more companies and startups that are providing some kind of substantial services or products, because nobody actually needs any type of another special application to get some type of services that already exist and can be provided easily. You really need to create a proper substantial product to serve a lot of people. And there's so many different areas in the world, and in Africa, unfortunately, especially sometimes, that they're underserved customers, and you just have to go into the market and gain the fruitful returns on your investments, and basically your decency and your courage to enter a new market that you maybe not be thinking before. So as long as we stay on the topic of the cryptocurrencies, blockchain, I would like to address the same question, the same opinion, to ask for the same opinion about what are the implications of adapting the blockchain technology, in particular in Nigeria. And I would like to get the opinion of Alubunmi on this one. So if you could just briefly share your ideas on the topic. I really have to ask all of us to be a little bit more briefed on the topics that we are going to discuss further, because we have a couple of more questions to discuss, and we only have around 10 minutes to do so. But yeah, I really would like to cover all the bases that we have discussed before. So Alubunmi, back to you about the blockchain and cryptocurrencies. Thank you.
All right. So I think Sadation has covered most of it. And I would say I'm always very excited to speak about crypto, especially for Nigeria. And like you mentioned, the landscape is actually, rapidly evolving. There's a lot of interest, like has been pointed out. We've seen we have some of the largest pockets of crypto communities you can find anywhere in the world. So if you're looking to come and invest, like bring your organization, come and have a crypto startup or a blockchain startup, you might not get the trade volume because, of course, the disposable income challenge in Nigeria or in Africa generally. But you see, in terms of usage, in terms of utilization, I think that we can stand with any other country all over the world, and it is proven. And we have a lot of crypto enthusiasts. We have a lot of people that call themselves investors. And I would say, apart from just cryptocurrency, we've seen a number of startups that are exploring blockchain technology. I started off doing that before I joined Binance, and you see a lot of use cases that are beginning to come up, like remittances. Some people are doing supply chain management. There's already identity verification, and even the government is already testing the usage of blockchain technology, or has done in the past, and is still trying to evolve in doing that. And just to mention that there are some challenges that I'm sure that you're going to face as a business. That'll probably limit you in the space for now. I would say number one, and of course, clearly is regulation. There is no clarity. There's no exact clarity in regulation or regulatory frameworks. Yes, we've designed a couple of sandboxes. We are still having conversations, but like Dr. Brima said, these guys it's a marathon for them, whereas it's a sprint, to be a sprint for you as a business or as a user. So these guys are still trying to get the nitty-gritty of it. They are still battling the regular Web2 fintechs. Now moving to crypto is sort of like a challenge, especially for a country like Nigeria, and you are seeing a lot of interest. Young people are screaming about it, like this is what they want and all of that. So and like as we mentioned before, as a business in the crypto or blockchain space, you can operate under that's without attention. But the moment you try to scale, it definitely catches up with you. And there's also a very notable gap in awareness and education because blockchain technology, these things can be quite complex. So you have to educate people, and that is what an organization like Binance and many other crypto organizations are starting to do. They're investing heavily in awareness and in education. Then we've seen a lot of scam projects that practically discourages a lot of people from it. You see rogues, you see a lot of breaches and all these things. But I would say overall, the Nigeria ecosystem actually, it encourages, or it has a lot of opportunities away from all the challenges that I've spoken about. There's significant opportunity for growth and innovation. We are just getting started. And like I said, 32% is very, very minute. If you go on the street, talk to people, it is on a need basis. This is what people need. They want to get off that they want to gain financial freedom. They want to move away from being affected by inflation of the fiat currency. So the stable coin is just good for them. Some people that can take more risk or have a higher risk appetite, want to trade, they want to learn how to trade, they want to invest. It's just, it's massive. So yeah, there's a very, very large potential for growth if you're going to come into the country. But the moment you start, you want to scale, you want to be bigger, then you have to be ready for regulation, which is not exactly clear and not there yet.
Okay, thank you so much. And also we have another question about crypto in Nigeria from the chat. And I would like to address this question to Dara. And again, I would have to ask to keep it short. But the question is it true that people still believe social media recommendations in Nigeria in frames of crypto? We've seen these trends before, but maybe it have changed recently. So Dara, what do you think? What is your experience with that? You're on mute, sorry.
Okay, thank you. So if I get your question correctly, right, you're asking me.
Yes, the question from, sorry, I will just reiterate. So one of the members from the chat, they asked if it's true that people still believe social media recommendations from people in Nigeria in frames of crypto. I think this is a very specific question, to be honest.
It is. Well, I wouldn't say it's a yes or a no question, right? Because I still think there's some people who are influenced by what they see on X or on advices from their friends on how to invest, right? So I wouldn't say it's a yes or a no question particularly, but what I can say is that when it comes to crypto, we've seen like different ways or clever ways how Nigerians have adapted to using cryptocurrencies. And one of the things or one of the things that we've seen is like a learning experience in the sense that some people have experienced crypto, coming to crypto through Ponzi schemes or MLM schemes. And, for them, it's like a learning curve, learning from that experience. They become more cautious and discerning when it comes to investing or even participating in similar schemes in the future. So the trends that I can see when it comes to like crypto is, yes, some people are influenced by what they see on social media. Some people are influenced by what their friends or what their community, because, they keep communities as well when it comes to crypto, what they hear, what's the next best crypto to invest in. However, that doesn't apply to everyone. It can be generalized, yes, because some people also learn a lot about the trade itself and how to go about it.
Thank you so much. I think this is very insightful for people that are not actually using crypto and being social media users in Nigeria. So I think we're going to be transferring for the last question of the night. And this is again about the perspectives and solving huge problems with finance and finance technologies in regions. Like we discussed before, this is one of the things that more companies have to be focused on. So the recent Standard & Poor's global rating suggests that the fintech companies will play an incredibly important role in closing the gap of financial exclusion and literacy in Nigeria for the next 5 years. And the shift in technologies towards digital banking, as we discussed today before, and these are accelerated by fintech innovations in adopting new technologies, and basically it is expected to contribute significantly to the progress and the process of closing the gap of financial inclusion and literacy. I think we've covered this topic before, but I would really like Dr. Babatunde to close the topic and share his opinion on these prospects and the supports for today's webinar. So do you agree with the statement that actually fintech companies are going to be leading the process of closing the financial exclusion gap and literacy in Nigeria? Thank you.
Well, yes, I think fintechs will lead, provided that there's economic inclusion. Economic inclusion comes before financial inclusion. So just wanting people to come into the space without an economic environment that is sustainable will be a wild dream. And I think that's one of the challenges we've had. We're supposed to be at 80% at 2020, and we're just at 64% financial inclusion. So I will give there was the Anchor Borrower program. A lot of farmers were registered, maybe close to 1 million farmers, because they were getting credit from intervention. Intervention is off now. These farmers' accounts are mostly dormant because there's no sustainability. So there has to be economic inclusion for financial inclusion to be there. Fintechs will play a role, but fintechs will not, what's it called? Fintechs are not charity organizations. They're in the business to make profit. So you will not go to where you're not going to make profit. So I think that government also needs to play its own role and create that enabling environment for economic inclusion to occur. And then financial inclusion will be sustainable.
Thank you so much. I'm afraid we don't really have the time to ask any follow-up questions because we just hit the mark of the time of our webinar. And I really enjoyed talking with all of you. And it was my great pleasure to meet with you today and discuss everything regarding technology and finance in Nigeria. And again, thank you for the participation and for the people that were listening for us and for the fabulous questions that we have some time to discuss today as well. And just a quick follow-up, we're going to be sharing this video with everybody involved, as I mentioned before, on our LinkedIn page. We're also going to be sending the emails for the ones that are going to be signing up for our emails. And you can see the QR code on the slide right now. And we would really love to stay connected with everybody. We're going to share the LinkedIn pages from our speakers today, so you can stay connected with them as well. And it was our great pleasure to have this discussion today, and hope it was very insightful for everybody involved. And once again, thank you so much for spending the evening with us and taking time to discuss everything regarding Nigerian fintech companies and markets in general today. And I hope to have a proper discussion with you in LinkedIn again and maybe meet on another webinar soon enough. Thank you once again, and I'll see you all soon. Have a lovely evening and take care. Thank you.